Hi traders, Anthony here. In this video I'm going to share with you my take on the fib retracement as well as the fib extension tool. So what we might do is go to a blank section of the chart and we're going to draw a picture perfect trend. Swing low, swing high, okay, impulse leg, retrace, impulse leg, retrace, impulse leg. The fib retrace tool is used to look for a potential entry trading with the trend. So we're going to pull it from the low of the impulse leg to the high, and I'll extend it across. So the market may be moving, it's reached a high and you see it pulling back and you're looking for your ideal entry. A lot of people consider the 0.5 down to the 786 as their ideal entry on the fib. Some of them are going to go from the 61.8 down to the 78.6, and this is their key area. So market moves, you pull your fib and you might set up buy limit orders through these levels here. This is how a lot of people use the Fibonacci retracement. I use the fib, however I have a method of finding my optimal or my key entry on the pullback, and we can have a look at that. So quickly, in a nutshell, market moves again and we pull the fib from swing low to swing high, and we're looking for that pullback down. There's the 61.8 right here. Okay, so we got a touch and our picture perfect trend is playing out, markets moving into our fib level very nicely. So that's the fib retrace. This is the default TradingView fib retrace tool here. So the other tool is the fib extension tool, and we use that to find our targets. So the fib retrace, swing low to swing high, for the pullback entry, and fib extension have here, and you can pick that up here, trend-based fib extension. There's two schools of thought. One is swing low to swing high exactly as you did with the fib retrace. You pull it from swing low to swing high, click, and then pull it down to swing low of the retrace. And these levels here are going to act as your targets. So there's going to be people out there that get pretty stroppy if you suggest that the fib extension is pulled from swing low to swing high back down to the swing low. And these guys are going to get pretty stroppy about the other guys who pull it down to the retrace, swing low. So both sides get cranky with each other. Okay, so let's consider this option, which I have to admit is my preference. If we go into the fib retrace settings and we go to style, let's introduce the 1.272, the 1414, and we already have the 1618. Okay, so these are levels that are going to be on the fib extension. Well, we're going to set that up, so we'll go OK. And so what we have now is the 1272, the 1414, and the 1618 down here. So what we've done is we've pulled our Fibonacci from the swing low to the swing high, and it's giving us these lows, these targets low back here. Let's grab the fib extension, and what we're going to do is we're going to bring it back up to the swing low of the retrace. So we've pulled it from the original impulse leg low to the high back down. And what we're going to do is we're going to introduce these levels into the fib extension. So we'll enable the 1272, the 1414, and we've got the 1618 into the fib extension. Now we can see up here we have these levels, same levels as below, 272, 414, and 1618. If we pick up the fib retrace here and we pull it in the opposite direction, we go from the swing high back down to the swing low. Let's do that. We're going to see a conflict. This is the fib extension. Let me pull it down now to the low. See what happens? Now let me pull the fib extension up to the swing low of the retrace. There's a conflict. If we pull it back down to the level of entry to our original low here, see how they line up? This, in my opinion, is the correct fib extension. The other thing to consider if you're into harmonic patterns is the cipher pattern. got X, A, B, C and D. If we grab the fib extension, C has to come in around the 1272. So if we pull the fib extension from low to high, we go back down to low. 1272 is the threshold for level C on the cipher pattern. And I can absolutely tell you right now that if this was the case here, that would blow the cipher pattern out of the water. It'd be very difficult to find a price pattern that would meet the criteria for a cipher pattern way up here. Swing low to swing high, back down to swing low, point C. So let's clear the decks. To sum up, swing low to swing high, entry point around the 61.8, fib extension, swing low to swing high, back down to swing low, and that's your fib extension for your targets. So let me show you what I've done with the fib tool. This is the default trading view, and I have here, and you can take a snapshot of this, my fib retrace 1 and fib retrace 2. Let's have a look at fib retrace 2, and I'll show you what this is. Swing low to swing high, and what I've done is I've color coded these. If entry occurs at the 61.8, then you target yellow to yellow. If entry occurs at the 50%, then your target is blue to blue. If entry occurs at the 78.6, your target is brown to brown. So it's giving you a measured move target. If entry is here, 38.6, this purple one, target is purple to purple. And, of course, the shallow pullback 23.6 here, target is green to green. That could be target 2. My target 1 is always 1 times the average true range. So this could be target 2. And what I've done here is I've actually set up the fib extension. So if we grab the fib extension and we pull it from swing low to our swing high point and back down to low again, see how they line up beautifully. There it is. So I've essentially built the extension into my fib retrace. Okay, so I'll just open this up so you can take a snapshot of that. Fib retrace, there's the style. You can pause the video and take a snapshot. Notice the negative values I've got here. Minus 0.28, minus 0.52, minus 0.42, and minus 0.618. And the colors, how they match up. I don't want to confuse you, but that's one version of my fib extension, and here's the other one. So I've got fib extension, fib retrace 1 and fib retrace 2. That's number 2, and then number 1 is this one. It's exactly the same levels, but I've taken a few out. Alright, so fib 2, notice the difference, fib 1. Okay, I've removed the 50 up here. What I've done with my fib 1 is I've stripped it back a little bit, removed the levels that I don't really use. So what I do use are these. Right, so you can see my 50, 61, 8, 7, 8, 6, the yellow zone down here. I've color coded these orange. That's a shallow pullback, orange, a shallow pullback. Orange is my target for a counter trend. I'm going to take profits around the orange level in a counter trend trade. Yellow is my entry trend continuation. Yellow is my entry trend continuation. Orange is my target counter trend. So if this was a counter trend trade entered here, target 1 could be anywhere in this zone, in fact. So that's a counter trend trade. Trend continuation, well, you've got my yellow zone entry, and there's my entry. These purple zones here are trend continuation targets. So it's always going to be 80% at 1 times the ATR, and then I'm going to go for target 2, possibly 3 and 4 if I'm trading off the fib. The purple zone also comes in as my stop loss levels on a counter trend trade. You're going to have to rewind the video. So let's just assume that this is a counter trend opportunity here. We've spotted an opportunity. This is overextended, and we want to counter trend trade that back down. My target's going to be the orange zone. My stop loss is going to be the purple zone. That's target 1, and then target 2 can be the 61.8 if you want. It's a lot to digest. Now, I guess you can watch the video again. So here's how this comes into play with our indicators. Let's have a look at a Bitcoin trade opportunity right now, and we'll factor in our fibs and what have you. Okay, this is overextended well and truly. Now we're going to do a very quick top-down analysis. It's traded into, you can see here on our indicators, we have this orange color level here. I don't know if you can see that, but that's a weekly level. We've traded into a key weekly level, and you can see on the daily how this is acting as support and acted as resistance back here. We've traded into a key level. This is overextended. All right, see our mean. We've traded out from the mean. I'm looking for an opportunity when this trades back into the mean. So there's a fib pullback right there. So if we're looking at this from the higher time frame perspective, let's do that. Okay, there's a level. There's a weekly level here, and we can see the market stalled around here, and we've got another level down here. So there's a level to pull our fib retrace tool from here down. An ideal entry would be a retrace back into the 50 to 61.8786 level, up around here. Okay, on the higher time frame, we're looking for these targets. Fib retrace. And remember, these are our fib extension down here as well. Trend continuation, we use the yellow and the purple. Purple are targets, yellow is our entry, potential entry. So it just gives us a bit of direction on the chart in terms of, where we might plan a trade around a pullback. Now, of course, you can go down to lower time frames. By the way, have a look at this. See how bearish this is here? So we've got a bit of history here from way back that this is definitely on the daily time frame bearish. So we're looking for a sell opportunity. So we'll go out of here. We know that we're trading into a weekly level. We could mark that if you like and pull that across weekly. Let's just set that up on all charts so you can multiply. You can copy the drawings over. So we'll just do that again. There it is. 4 hour, a little bit closer to what we've already got. A lot of people get confused about time frames as well. So let me just help you with that. Think of it this way. This 5-minute chart is just getting closer to what's going on the bigger time frame. So we're getting right down into the nitty-gritty. So if we open up the 5-minute chart and we scrunch it all up, so that's the price action that we're seeing on the bigger time frame. Okay, so it's there. All we're doing is zooming in on the price action in a micro level, I guess, if you put it that way. So let's just check it out from a Fibonacci perspective. 4-hour chart. Let's go over here. 4 hour is bearing down. I want you to notice this. Have a look at the strength indicator and see where they're both trading. See this outer line here, that's overextended. We have the mean in the middle, and we have these outer lines that are overextended. So we've got the same thing on here. So this is the mean, and then we have these outer levels that are overextended. Open up the 15, bring in our thing here, so we can see that the higher time frames bearish. So we want to find a sell opportunity. 15-minute chart. So what we're looking for, we have impulsive move, retrace. Impulsive move, retrace. Impulsive move, same thing. But you want to be careful because on the higher time frame, you could look for a short opportunity here, but we've traded too far out. See on the 4 hour, you don't want to be looking for a short this far out, this far out from the mean. It's dangerous. It's asking for trouble. You want to look for a short on the pullback into the mean. Fib retrace, 61.8. It's a bit messy. So we're way too extended here to short this. And I mean, it could be a great trade. We jump in here and we make a ton of money. It's too risky for me. Let's have a look at it on the 1 hour. I want the pullback. So let's have a look at that. See on the 1 hour, well and truly overextended. Just be careful. If we're looking for the fib retrace, where do you want to pull that from? I mean, it could be here, and that'd be a higher time frame impulsive move. There's your fib retrace. And it makes a lot of sense to me to sit back and wait for and see how it comes into confluence here with our indicators giving us our level here. So this is the mean. We want to see the pullback into the mean. It might be down here. And then it rolls over and then we have an opportunity. Now the fib retrace is not going to be an easy gig when price action behaves like this. Trading with the trend, you're looking for your 61.8 retrace. Where is it? Look at that. Okay, so it's not picture perfect. But where it is really powerful is, again, where I said don't look for a trade when the market's overextended. So here we are, look at this, see? This is where the fib retrace is going to protect you. If you get rid of that, your set of rules have to include you don't short it when the market is overextended like this. You just stay out of that. Even though you entered here, you would have made a ton of money. It's too risky. The market is overextended because the market can, it can do that at any time. So I'm always waiting, and this is how we use our system. When we start to see the market pulling back into the mean, well, that's your opportunity, is to catch this rotation here. Even here, here, and here. That's your opportunity to short it. It's catching the rotation, and then if you've watched all my other videos, we go in on the lower time frame and we're looking for the rotation on the lower time frame on the 1 minute chart. But have a look at it on the hourly. Look, see how far we are out here? Okay, don't touch it. Just wait until you see something like that, and that's going to be, if you want to grab a fib and pull it through, look, there you go, and you're wanting to see the pullback into our zone here. And when you see this pulling back into the mean on the 1 hour, then you go down to the lower time frame. So let's just mark that out. Even from here down on the 1 hour chart, we'll do that. Okay, there's our fib, and then we go down to the lower time frame. So our plan of attack is going to be, well, we want the market to pull back into this zone here. So let's have a look and see what it looks like on the 1 minute. We'll just go here, or even a 3 minute chart. Just stay away from when it's so far overextended. I mean, you could take that on the lower time frame, but that's not what we're looking for, because this is too dangerous here. This could do that. You know what I mean? You don't want to be trading it when it's extended on the higher time frame like that. This is high risk. If you pull your fib from here to here, and you're going for 50% pullback, you might be okay, but there's a lot more risk involved. So my thing is, well, stay out of it. Use the fib on the 1 hour, and this is going to be where you want the market. That could work its way back up again. I don't trust it. We've got a big level down here. This is a weekly level down here. So come back to the 1 hour time frame with your fib and plan your trade from this higher time frame perspective. You want that pullback up into closer to the mean on here, and then on the 1 minute you're looking for the rotation and your breakout signal. And there's your fib pullback right there. So if you have a look at this quickly, this breakout, where did that happen? See that? There's the break there. See how it's pulled back into the mean? That's it. Anyway, guys, big video. Wait for a pullback, and don't get involved with it so far extended. With that, make sure you give me a thumbs up and comment, and I really want you to help my YouTube grow. It's slow going at the moment. And of course, if you haven't already and you're new to my videos, jump on board with me. I'll show you my website quickly. Just head over to my website. It's tradingwithanthony.com, and some stuff here, but go to the store, and you've got a 7-day free trial. You click the PayPal and it won't bill you today. It'll set it up for a 7-day thing, and then you've got full control in your PayPal. That's a good option. Okay guys, with that, safe trading, and I look forward to seeing you in Telegram.